Hey, what's up, guys? Welcome to another video. I know I haven't posted in a long time, but ever since I went all in on BMNR, my portfolio has not done very well. So I just didn't really want to post, since I've already been so wrong. I don't feel like I have the authority to say anything that is important, right? But in any case, I am still going to make a 2026 prediction. I'm once again going to be a little bit contrarian on this. That hasn't worked out with BMNR, but I think I still have some interesting points to point out. So first things first, we are the S&P 500. The S&P 500, I've changed the the indicators a little bit, but I'm going to focus on the MACD, and I'm going to be taking the 1 week time frame. So my thoughts on the S&P 500 is that this run might very well continue because it might not really seem like it, but I think the rate cut cycle is still extended. And what that means is that the longer the rate cuts take, I think it will sustain the bull run until the last rate cut, or what's perceivably the last rate cut. And there are some other factors that I think will also collide. I'll get into it a little bit. So I think this S&P 500 bull run will continue. I'm not sure by how many percent. My guess would be around 5 to 10%. Once this MACD curls over, I think for the last 2 or 3 weeks, liquidity in the market has been very, very weak. Mostly because honestly, I think the people who have made all the money have already stopped looking at the markets and don't really want to look, for any other place anymore, especially this late in the market. I'm recording this in the last day of the market, so the only people looking at the markets right now are people like me that have made huge mistakes and are trying to look for the next play, right? If you have made a lot of money in this market in 2025, you will not be looking at the market right now, which is why I think the liquidity is pretty weak going into the end of the year. Um, so let me talk about some things that I see that might happen in 2026. So the first thing is the US runs out of room to cut rates. Now, I'm not sure if Jerome Powell will continue to cut rates, but we do know whoever Trump appoints is going to cut rates. And, from the way I look at it, they have room to cut rates all the way until around Q2 or Q3 of 2026. Um, so, my target in 2026 is that there's going to be a run up at the start of the market and there's a crash at the end of the market, right? A lot of professional investors, which maybe I should be listening to them, but a lot of them are saying that there's going to be a crash at the start of the market. People like Tom Lee are saying that there's going to be a crash at the start of the market and then a recovery at the end of the market. I am sort of going the opposite of that, because of these two factors. So number two is unemployment's due to job cuts and AI. So people are saying that this is the wrong one. People are saying that unemployment's well, obviously it's increasing, but people are saying that AI isn't really causing it, but uh, businesses are still trying to become more efficient, and instead of spending money on people, they are spending money on AI or computes or agentic workflows, right? And I think that might lead to more unemployment, and unemployment takes a long time to show up in earnings because especially in the economy we are at right now, where most of the spending isn't really coming from consumers. NVDA is cutting back on their GPUs for consumers, right? They're cutting back on GeForce production because consumers are not paying it. Most of the money that NVIDIA is making is coming from other companies, right? Other Mac 7 companies. And that's why I think that um, yeah, unemployment is going to start next year, massive, I think, unemployment, unfortunately. Um, and it's going to take a couple of months for that to play out in the market. So I think once again this coincides with Q3. I think by Q3 we are going to see max pain from unemployment seen in a lot of the Max 7 companies, even if most of their revenues come from um, you know each other. Uh, I think at some point the consumer will matter in Q3. And then the next point is OpenAI's IPO. So they are estimated to IPO in I would say the latter half of 2026. Not really Q2, but whenever a company IPOs, there is going to be a lockup period for the IPO, right? Which means a lot of people that invested pre-IPO has to wait a little bit before they can divest. And you have to remember this is a $1 trillion company. So when they IPO, it's going to suck up a lot of liquidity from the rest of the market. Um, and it's going to go right back into AI again. Um, so that's why I think there might be a massive run. And companies like OpenAI only will IPO when there is maximum amount of liquidity. So I don't know if they know or if they know something that we don't. But if they're planning an IPO, they must be planning it because they see that there is going to be a bunch of liquidity, maybe, um, when they IPO. And they're going to soak up a lot of that liquidity. And once their inside investors pre-IPO start to divest, that is going to take out a lot of liquidity from the market. And once these people that invested in OpenAI pre-IPO divest, I highly doubt that money will go right back into AI. I think these people are going to rotate it into something. I don't know what, because maybe they'll keep it in cash. Because if they see a massive drop in the stock market, then they wouldn't put it in stocks again, right? Uh, so that would lead to Q3. I think either Q3 or Q4 at this point to being bad because all that liquidity would be sucked up in the first 2 quarters and then dry out in Q3 and Q4. Instead of liquidity, maybe I should say capital, but I'm not an economist, so maybe I have my terms wrong. I have a lot of things wrong. Okay, number four is the slowdown of AI capex. So at this point, I think we also know that AI isn't necessarily driving the most profits. We are seeing so many companies with AI models. They have to put out their models for free, right? Because it's just a start, and a lot of these models can't even really generate any profits. So that's why they're giving out for free. And giving out for free means that they lose even more money from revenues they're not generating, and even less profits coming out of that. So at some point, this will slow down. This is going to clash with the consumers, right? You think about companies like Google and Meta, they sort of do rely on the consumers. Now, it's not that much, but without the consumer, you know, they, Meta and Google are going to suffer as well. And at some point, they will have to slow down their capex because they might even run out of free cash flow. To buy all these NVIDIA chips, or in Google's cases, the TPUs, right? And this will lead to a slowdown in AI capex once again in Q3, Q4. I think the reason I think there's going to be a massive run up in the beginning is because there's going to be a new capex cycle in the first 2 quarters, especially for AI. Most of these companies plan um, their capex at the start of the year, and then they adjust it as the year goes by. So I think there's going to be a new capex cycle. I don't see any of the companies cutting back on their AI spending just yet. But when one company cuts back, the rest will as well. So that will lead to a cascade effect, and I think there's still going to be more time. Either that or they cut capex right out the gate, and I think we see a really really bad market crash in the beginning. And then point number five, Trump loses midterms. I think it's a high probability that he loses midterms at this point, because of all the controversy. And I think, I don't have the data, at least, not with me right now, but people don't really like Trump right now, and he might lose the midterms. The midterms are going to take place in the middle of the year, and you know, I think he might lose a substantial amount of power. And Trump is typically, what do you call it? He typically is put in the same vein as the stock market and crypto. And when he loses the midterms, probably in Q3 or Q4, or around the end of Q2, it's gonna cause the market to worry, because there's one uncertainty, and I think that might cause the market to crash in Q3. And then last up, we have SpaceX. SpaceX IPO in 2026 again. So instead of just $1 trillion company, we might potentially have $2 trillion companies IPOing, and both these companies will have lockup periods. They won't be IPOing in Q1, I'm pretty sure of that. So they are likely going to IPO in Q2 or Q3. When that happens, they're going to soak up a lot of liquidity. And once again, those investors pre-IPO are going to sell. And I think that will lead to a massive liquidity crunch in the market. And that will lead to Q3 having a market crash. So back to the S&P chart. Um, Based on the MACD on the weekly chart, I think this will continue to curl green again. It's looks pretty unlikely, because if you zoom out a little bit further, the market has only been going up since the last 3 years. So this already looks unlikely, and I think that's why some investors are saying that there is going to be a crash right out the gate. But for the reasons I listed, I don't think or really agree with that case. I think, based on the MACD and based off what I think on the white paper, as I would like to call it, there's still going to be a run in Q1 and Q2 until both of those giant companies IPO. By the way, you might not want to, or my plan is not to sell when SpaceX or OpenAI IPOs. My plan is to sell at the peak of those IPOs, right? Now, I'm not very well positioned for that, I will admit. I would have liked to be a little bit more diversified, but unfortunately, my BMNR did not work out. You can see here I'm down 53%. Now, I'm still holding my BMNR, but I think there's some things that I got wrong with BMNR, mainly being that I thought this would go up way faster than it did, but that didn't happen. And in retrospect, I should have done a little bit more math. I should have looked at MicroStrategy a bit more closely. Now, I didn't invest in MicroStrategy, so I didn't know that MNAV, one MNAV is, I think, the appropriate amount of MNAV. Okay, I thought BMNR would stay at 1.5 MNAV, and I think more importantly, I thought Ethereum would go up immediately because of all the use cases that it had. But unfortunately, I think Ethereum still has a bull case, but all the bull cases are going to take some more time. But once that happens, I think Ethereum would go up. And since we're here for Ethereum, I think I have a very simple thesis. If Ethereum breaks this support, I think it can go down all the way to, I don't know, 2,400, around that range. But if we get liquidity right out the gate in Q1 and Q2, I think this could very well recover back to 4,800 by Q3. And if all the use cases start to play out next year, once again, if business activity or the tokenization ramps up, then we can see 4,800 by Q3. And at that point, if I'm not wrong, I have the math done, but I don't have it exact. And there's a lot of uncertainty in BM now, so I'm not going to do that. That's Ethereum up 60%. So we're going to have to put in, I would say, 60% for BMNR as well. That would put it back at 40, 45. So BMNR, I think most people are still not going to break even on that. I've done a volume weighted average price, and most people had their bought their shares at 60, including the institutions. But the institutions are going to buy a lot more on the way down than retail. Um, I think at this point, retail has run out of liquidity. I've done simulations on BMNR. Every time you bought BMNR based on technicals, you would have lost all your money because BMNR basically takes that liquidity, dilute, and then buys Ethereum, right? So there's no way you could have traded this unless you were buying puts, or um, you could have sold at the top and then bought at the bottom. That's possible, but I think most people, once again, I've done the simulations. No matter what price you bought BMNR, it's going to get soaked up. Um, and I don't think anyone that's been in BMNR for the long term has made money. Uh, but once again, it goes back to the consolidation ranges for BMNR. So it's currently consolidated for about 183 days. And my thesis for this is that MicroStrategy has consolidated for in the past about 400, 200 to 400 days, and unfortunately, I think BMNR is going to take around that time. I think BMNR, we have to give it another 120 days, which isn't even that long. 120 days would lead us to I think right before Q3, at middle to the end of Q2, for it to hit about 45 if Ethereum goes back to 4,800. So I still think you have to wait for BMNR a little bit, as well as crypto. I think the selling has been exhausted. I think most of retail that's already panic sold, or most of retail that would have panic sold, and institutions are likely going to have more liquidity to hold this. But I would not like BMNR to dilute anymore, because if they keep doing that, at some point institutions will sell, and if institutions can't make money on it, they are not going to prop up BMNR. As simple as that. So that is BMNR. I would say I'm still bullish on it, but my uh, what do you call it? My expectations are way down. I think 45 by Q3 is possible. And then if there is a massive liquidity crash, I'm not sure if the money from, for example, silver, if silver goes down, I'm not sure if this will go into crypto. I think it's possible, but at the same time, the probability is very low. Um, but it's possible. If silver and gold goes down, and these people put it into crypto, that could very well boost crypto. But I don't think I've seen anyone do a pair trade on that. Um, so I think I'll leave BMNR at that. And then I am also going to be moving to, I think, IBKR. I think that's why I've planned, because IBKR has a TradingView integration. And I think what's cool is that you can see, if I'm not wrong, you can see my buys here. Uh, well, there used to be up arrows here. I'm not sure how it works necessarily right now, but yeah, you can see that I have NVIDIA buys. It seems to be canceling my previous buys, because I bought NVIDIA twice before this. Um, but just to go through these two positions, it's by this point it's puny. It's very small, because I've lost all my money in BMNR, and I can't exit BMNR, and that's one of the things that has been the most devastating. It wasn't losing money in BMNR. It's more of the opportunity cost of being stuck in BMNR. Um, so I don't think I will be going all in on one position anytime soon in the near future. But I still think BMNR will work out. maybe that's just me hoping. So for Netflix, they have a deal with Warner Brothers that's not gone through yet, and there's still a substantial amount of risk here. But I think Netflix is pretty recession resistant, and if they get that Warner Brother deal, they can go, I think back to around 110. Um, and if they don't, I think they might have to stay here and consolidate. But I think eventually, investors might find that people are still not going to cancel Netflix. Netflix is a company that I haven't been able to understand in the past, but I think um, people are not going to cancel their Netflix, and that will lead their stock to go back up, but in a slower fashion. If they don't get the Warner Brother deal, I think they will take a little bit longer to consolidate. Um, Maybe like 2 or 3 quarters to consolidate. This is not, a correct. I don't. Maybe around here. Okay, this isn't the correct length. Okay, but it's just what I think. If they don't get that Warner Brother deal, and if they get that Warner Brother deal, I think it's possible that they hit back up in a shorter time frame. Around something like this, right? That's just don't follow the arrows. That's just what I think. And then for Nvidia, the play on Nvidia right now is that I think once again with the S&P 500 and with the new capex cycle, Nvidia is going to get a boost right out the gate. And with OpenAI IPOing, OpenAI is going to get a lot of liquidity. um, I should stop saying liquidity. I think OpenAI is going to get a lot of capital, and they're going to put their capital into Nvidia when they IPO. So I think Nvidia still has some room to run. I've made some, few mistakes which I'm not going to go through with Nvidia right now, but I think Nvidia will still continue to run. Don't follow my drawing, but it looks to me like there's going to be a cup and handle pattern forming here, and then it'll go down. This isn't the Q3 dip. I think it's just gonna form that cup and handle, then it's gonna go down, and then we'll see where it goes. It can go up, it can go down. But that's just my thoughts. I think it goes back to all-time highs again before it goes down. And that is my thoughts on 2026. So I'll look back and see if I'm correct or if my theories are, wrong, like my BMNR thesis. And that'll be pretty fun. So see you in the next one.